Hello, my name is Steve Bigelow with the Candlestick Forum. A lot of people were asking for more explanation on how to utilize the candlestick charts with the addition, or I guess the accumulation of candlestick signals and patterns to give you much more clarity as far as what's going on or what improves your probabilities of being in the right trade at the right time. As we can see, ever since the failure of the Dow here at the 50 and then closing below the T line, we're in a downtrend. Today, they came through this level, which kind of acted like a support level. Stochastic's not yet in the oversold area, and there was no buy signal. Again, this is probably the accumulation of consideration of the Ukrainian situation, of inflation, and as we can see in quite a few earnings that have been coming out, even though they've been good, apparently they haven't been as good as what people were hoping for, and they've been selling things off even after good earnings. But right now, obviously, there is no buying. That could still be perceived as a wave one, wave two, wave three in progress. And we've got much more indication of which way the market's going based upon our doji rule. Remember, the doji rule says the price will usually move in the direction how they open after a doji. Makes the analysis relatively simple at this level. If this is a support level and they open up positive, it's probably a good indication that this is a support level. If they open it lower, creating the prospects of a bearish doji sandwich, meaning the magnitude of this is going to be the same magnitude as this trading day, that's a good indication that this level is not acting as support. We're in wave one, wave two, now in wave three. So the T-line rule helps us out as far as keeping us from getting scared out of positions, even though the market's going the opposite direction. As you can see on our recommendation of GOGL, little J-hook pattern, Morningstar signal at the 3T line. It's still trading above the T line, which is a strong indicator that the uptrend remains in progress. This T line factor tells us the probabilities are extremely strong. This price is in an uptrend, even though the market itself is selling off. So what we're looking for, if the market's selling off, is the strongest signals to the downside. KPTI did a bearish kicker signal today. That's a strong indication there's been a major change of investor sentiment. Now, what we're trying to teach people in the Candlestick Forum, in the chat rooms every day, in our training sessions on Monday and Thursday nights, is you don't, let's see how to say it. Not only are the signals relevant as far as showing you what's going on in investor sentiment and producing the prospects of high probability trade trends, but we're also allowing the investor, the candlestick signals allow the investor to change their perspective of not listening to what other people might be saying or what a analyst might be saying. You've got much more control by knowing what the investor perspective is and using those for your own trading abilities. That keeps you from getting whipsawed and allows you to be in positions with a high degree of probability that you're in the right trade at the right time. So the candlestick signals and knowing which way the market is moving in general allows you to take advantage of strong reversals, of knowing which way to go. CSIQ did a bearish flutter kicker signal, one of your strongest reversal signals, at the 50-day moving average where everybody else was watching. Stochastic's rolling over, and then today they gapped it down not only through the T line, but through a perceived resistance level or support level. Just improves the probabilities dramatically that you're now in a downtrend. Again, this is more the identifying the signals, but also being mentally prepared to take advantage of what's happening in investor sentiment. So we are going to be doing a training session this Saturday. We're going to be concentrating on the bullish and bearish engulfing signals, not necessarily just recognizing the signals and where they're occurring, but also having that mental preparedness of knowing what to expect so that you're not anticipating or you're not worried about what the market's doing. Notice how Road has had a slow, steady uptrend, even though the market has been selling off. And every time it comes back to the T line, there's a candlestick buy signal. Today, it did a bullish engulfing signal, but staying above the T line, closing above the 50. This merely reveals that this uptrend is still in progress, no matter what the overall market is showing us. On the other hand, if you want to go with the flow, you find the bearish engulfing signals and you add all the elements together, a bearish engulfing signal in the overbought area, closing back below the 50 and the T line, told you had a high probability that you're heading lower. So we look for those type of signals. As Alcoa did a big bearish engulfing signal, closing right at the T line. This improves the probabilities and the expectation that if we witness it opening lower, the downtrend is probably in progress. We're coming back to a major support level. So the reason we're doing these mini trainings on Saturdays, they usually last an hour and a half, sometimes 2 hours. But what we're trying to demonstrate or illustrate is if you've read the books and you're starting to understand what the candlestick signals and patterns illustrate, if you join us during one of these sessions, it's going to greatly improve your learning prospects or your learning ability. That's not the right word. Your learning capabilities of adding all this information together and greatly improve your trading prospects. That'll be it. We'll see you in the chat rooms.